So our next panel is on China, China on the brain with this one. Canada-EU partnership in the global trade transition. So we have one guest joining us online. So we'll just check that everything's working there. So Shannon, can you hear us, and can we hear you?
I can hear you perfectly.
Brilliant, great, nice to see you. So we have on the panel here Sharon Blanchard, who's on the screen, who's the Director of Supply Chain Innovation at Port Saint Jean. And on my left is Olga Vovk, who is the Senior Regional Manager for Europe of the EDC, which is the Canadian Export Department, for companies to help, want to sell their products around the world. Pascal Kerneis is the Managing Director of the European Services Forum, which speaks for itself. Mark Camilleri is a lawyer and also President of Ceutia, is that right? Sorry?
Canada-EU Trade and Investment Association.
Yeah, the Canada-EU Trade and Investment Association, but I was wondering how you say the acronym. Is it? Ceutia. There we are, Ceutia. Sounds like a Canadian province, actually. So we're obviously all aware that global trade is changing very fast, and we discussed a few of these topics on the earlier panel about the decoupling of supply chains, the fragmentation of the world, perhaps into blocks. The US is talking about friendshoring and buying more from its allies. Everyone seems to be trying to rely less on China. So let's and obviously China, has had a lockdown recently, which has again thrown a spanner into the works. So if I could just ask the panel, how global supply chains could respond to this, and how that might help the EU and Canada. So if I start with Olga, as you're next to me. Yeah.
I'll be a guinea pig, right? So no, thank you. That's a very good question. I think we started to notice how actually the paradigm of supply chain changes during the COVID. So the world probably reached the peak just before the COVID of just-in-time supply. And during that time, we quickly realized that it's not quite possible to rely just on one partner. And then the diversification has started then. And then obviously in this year, after the Russian invasion of Ukraine, we experienced a second wave of the kind of collapse in some instances of supply chain. So the question is obviously what Canada can do. And it's during this time, Canada stepped up across a number of instances. So the previous panel was talking, for example, on the energy security and energy supply, the LNG. Canada doesn't have the LNG exporting terminals. Well, yes, that's quite right. What probably is unnoticed is that Canada actually increased the supply of natural gas into US, which in turn actually allowed the US to increase the LNG supply into Europe, securing the energy security. So that's just one instance. Another probably quite obvious one, the supply of fertilizers, potash. Well, Canada is an obvious kind of suspect for potash supply. So that's another way where Canada can play a role. And I think you also mentioned about globalization and onshoring and nearshoring or reshoring. So there are different kind of semantics is used. So obviously, I think we'll see redistribution. So some things will be, so the suppliers will be diversified. In some other cases, there will be a trend to probably nearshoring and seeing like what can we do closer to home, so to speak. So I'll stop monopolizing the floor and maybe stop here.
That's a great introduction. Thank you. So Pascal, you deal with people rather than goods, I guess, but you may have an insight here.
Yes, well, I think it is a bit too early to say that we have already decoupled from China. We will see the crisis of this year might change the things, but if I look a bit back into the figures of EU trade with China in the last years, even during the COVID crisis, we have continued to export more and more and more to China, and China has continued to export more and more to the European Union. So in terms of trade and services, we have a surplus of 21 billion, and this surplus has never been so big. And when we look at the trade in goods, it is true that it is even growing even bigger, and it is at the highest level ever. China is exporting 472 billion euros to the European Union in 21, and we have a deficit of 249. So we are very big, very far away from decoupling, and still very much dependent on China. As China is dependent also on the export and import from the European Union. So I think that is important to say, because there are a lot of intermediate goods which are a part of this trade. Now, it's true that in 22, I think the situation is changing dramatically. First, because of the COVID-0 policy in China, and that is reducing the production and reducing the possibility of China to export. So probably next year we're going to see the figures going down, as well as because of the war in Ukraine, where that is creating the inflation we have heard about, the energy price and so on, and therefore diminishing the demand from the European Union. Therefore, there also probably we will have a decrease in demand. Now, you were also asking whether we will be losing access to these low prices that the production of China has offered us for a long, long time. I think China is not that cheap anymore in terms of low wages, etc., and products. So many companies have started already to diversify their supply chain to Vietnam, to Indonesia, to Malaysia, etc., to Nepal, etc. So that we have already started that, and that I see that growing in the future. Talking about my own area of expertise, which is the trade in services, my response is that we never really got access to the Chinese market. If you look at the banking, if you look at insurance, if you look at telecoms, these sectors are pretty close to us, and we have a minuscule part of foreign direct investment in China because the market is closed. We had this negotiated agreement between EU and China on investment, which has been concluded, but now because of geopolitical situation, I think this agreement is probably in deep freezer for a while. So this is not going to be increasing, but that means that we are not have to do the effort of diversifying from China, because it is not really a major part as it should be. I'll stop here.
Well, I don't have much more to really add to that. I think it's all pretty much been said. That said, Canada is definitely produces goods and services that the EU needs, and certainly has the potential to produce more. But one must be careful not to overstate what the role Canada can play in terms of filling in that gap. So I think when we're talking about the relationship between Canada and the EU, we're certainly off to a very good start. With CETA, we were building on something that existed before. Nevertheless, it's a long road ahead, but a very positive one at that.
Okay, and Shannon, do you have thoughts?
Yeah, I really wanted to focus my response on the logistics chain. So if you look at the timing of the introduction of CETA being in 2017, and then shortly thereafter from the global pandemic stand, really impacted the resiliency within the logistics chain. And to put that into perspective, we saw significant increases in container rates. So if you look at the trade between China and any point globally, we saw an increase in container rates. So pre-pandemic levels were at about $2,000 per container, and they skyrocketed immediately to about a $20,000 mark. So essentially, shipping lines globally really focused on the opportunities within the China trade. So when you look at any other trade routes, so if you look at Canada to the EU perspective, it really gave a really challenge with respect to container availability because the shift in the trade routes with Asia because of the change in consumer spending. So because of that, and not having access to containers and the increase in rates, it really puts trade and other geographies at a disadvantage. And, you know, companies who thought at one point that they would see the benefit of a CETA arrangement and decrease in costs in trade actually had an increase in their transportation costs, which essentially didn't provide an advantage. Now, to kind of build out where we're sit today from a logistics chain perspective, rates have come down significantly across the board, not to the 2000 pre-pandemic level, but still at a place where businesses who are looking to develop other markets, like Canada and the EU, for example, will be able to see those container rates assisting in achieving some savings and also looking at diversifying their supply chains and also their trade routes. I know that there was mention of near sourcing, but there's also that whole notion of sustainable sourcing. So as people look to build out resiliency and increase trade with other countries, the real change in the logistics chain since the pandemic started and having more favorable rates will assist in that regard.
Yeah, if I can just come back to you, Shannon, on so what you're saying is there is becoming a resiliency argument, but it's still a lot about availability and price. Is that fair to say? So, you know, this great switch that people talk about, suddenly people will stop dealing with China, is a long, long way off, if ever.
I think that that's going to take some time, certainly. But what it has done is it's created a more favorable circumstance for companies looking to build out alternative logistics chains and or markets that they're looking to source product from. Because of the change in the timing, going from a $2,000 to $20,000 container rate didn't really play favor in markets that it's not as cheap as it would be to source products from China, for example. So having a more favorable rate because of the container availability will assist companies who are looking to find alternative source points for their products.
Just on following up your point, Pascal, do you see this shift to Vietnam and other countries as essentially a cost issue or a resiliency issue or a diversification issue or a little bit of all three?
I think it's certainly a little bit of the three, but the geopolitical situation is taking more and more part of business decision, and diversification will come a must for companies. So exploring other possibilities, and then if you find a good partner, you're going to continue with that partner for a while. So I think it is really important to be sure that you find new partners, but to find new partners requires some investment from part of business. And if you know, a business decision is always assessing the risk, and assessing the risk would be, is this market secure for me? And the geopolitical situation being there, if you have possibility to do business with a partner in which you have with Canada, for instance, CETA, or with Vietnam, we have an FTA, it is part of the decision.
Olga, you?
Yeah, just maybe to quickly add on this, what the trend that we have been seeing also with some of the European clients is the tendency to diversify the suppliers, but also the increased reliability and actually quality. So it's not just about the cost. It's, yes, it may be cheaper in the short run, but then we had specific requests that you know, can we source something similar from Canada because it's more reliable, it's better quality, etc. And probably on a sort of the cost side, it's also the question of if supply is being diversified, there will be inevitably a rebalancing, of course. So we'll see this trend kind of continue.
So on the on CETA itself, I mean, I was at a conference a few weeks ago. Some same people I think were there, where 5 years since CETA. And as well as some of the benefits of the agreement, some of the problems were raised as well. And I just wondered, Mark, you know, how are Canadian businesses finding actually accessing the market that they're entitled to access? You know, trade, as we know, is not just about access, it's about non-tariff barriers, it's about, you know, qualification, skills, you know, there's many ways it's about finance, you know, which we'll talk about as well. So how are companies experiencing the CETA?
Sure. Well, at the end of the day, CETA is a trade agreement, but it goes, it cuts down tariff barriers, so it provides market access to Canadian companies into the European market. But it's and it's working. What we're seeing, of course, is that the trade numbers are strong, they're robust, they cut across different industries. But there remain some issues on CETA in terms of its ratification, which remains a work in progress. There's issues about the implementation itself of CETA in terms of some of the commitments that both sides, Canada and the EU, were committed to, that also need a bit of work as well. But at the end of the day, it's also about, and really where I see the real potential of CETA, and always saw the potential of CETA, was in the non-tariff barriers to trade, the regulatory cooperation. And there, you know, under CETA itself, there's over 20 committees and discussions on various topics, some of a technical nature, some of a bit broader in scope. And we also heard from the ambassador that the SPA as well has over 50 committees as well. So what we're talking about here is potential to really dig deeper into the relationship and ultimately de-risk it to a certain extent. And I think there's been definitely some progress, but I think the progress is slow. That's the nature of regulatory cooperation. But I also think that given the strength of the relationship as it stands, and certainly after 5 years, it's also a platform where it could be a bit more, it could handle a bit more weight in terms of ambition, as well in terms of regulatory cooperation, and so it'd be nice to see some deeper issues being discussed, digital trade type of discussions, for example, and then of course just putting it all together as well is also a bit of a challenge. With all those committees, it's very difficult for businesses to actually understand what is actually going on and how it helps them as well. But on the specific point about Canadian businesses accessing the EU market, I think it's important to remember that the CETA, even when it's fully implemented and fully ratified, it's still a tool. Ultimately, what Canadian businesses need to be doing more of, I believe, is more. It has to have more understanding about the EU market, because while CETA provides market access, Canadian companies still need to adhere to the rules of the member states in which they're operating. And increasingly, these are coming from the EU itself. And so there's opportunities to be had by looking at the long-term trends of the EU that are being discussed regularly in Brussels. And that's where I think there could be even more opportunities.
And Pascal, on the services side, I mean, it's always the hardest part of trade, isn't it, to some extent? I mean, talking with the UK relationship, you know, there's this question about professional qualifications. Everyone says, well, look at CETA, you know, they have mutual recognition in there, but as far as I know, I think it's only architects who have their, you know, so you can't just come here many professions cannot come to Europe still from Canada and just work. They have to jump through the hoops. So is there any prospect of that changing, do you think?
Well, if you focus only on professional services, I think the answer is probably no. Because into the agreement you have to have mutually interest to go into that line, and only the architects have expressed this interest, and it took so long to finish the line. But if you ask the lawyers, if you ask the engineers, if you ask the accountant, if you ask the doctors or whatever, veterinaries, they have said they are not really interested. And that's probably because it is either too complicated or because they have found another way to bypass this barrier of recognition of the qualification. Simply because if you take the accountant, for instance, they have the possibility to do partnership with others. So instead of having a person going in the country and getting the qualification in that country, you just do a partnership and you do business with an accountant which is already qualified there. And then the international business of such a network will be actually part of management consulting, where the person will be helping and advising, but will not sign the final auditing report and therefore doesn't need to have the qualification. But I think if we go further into the services as a whole, which is probably not well understood by many of you, and when we talk about international trade nowadays, it's only about energy, raw materials, and manufacturing. Well, that is not the truth. The economy in Canada and in the EU is more than 75% services, and I bet nearly all of you in the room, nearly all of you will be doing services, maybe without knowing it. But there are so many services which are linked to the manufacturing and to the goods and to the mining, but are essential for international trade. There is no trade without, first, a lot of digital transactions, then you have the transport and the shipping and the logistics. You do not have any transport of anything if it is not insured and reinsured and well-financed first. So you have so many services around there which are part of international trade, but which are part of the domestic economy in one country or the other country. We do more international trade through foreign direct investment, so establishing ourselves as a subsidiary there, and the business of that subsidiary is actually going to be into the domestic GDP and not in international trade. But without the possibility to have the right to be established abroad, which is what an FTA is doing, this is not taking place. So Mark talked about regulatory cooperation. There is a lot of domestic regulation part into the CETA and domestic regulation, probably not sufficiently domestic regulation into services sectors. I think that should be explored a bit further. But I think that is really something that we want to go further, and in particular into the digital world. Mark was talking about the digital trade. We, the European Union, are launching discussions with partners like the United States with the famous TTC for Trade and Technology Council. We have digital partnership agreements with Japan, Korea, Singapore, and others. Could we think about including Canada to the TTC, or could we create a TTC with Canada? You know, that would be something of interest to explore, certainly, in terms of going deeper into providing legal certainty to the business. Thank you.
And Olga, what barriers, you obviously help businesses to access markets, so what barriers do you find under CETA?
Yeah, definitely. It's in our DNA to help Canadian companies expand internationally, in fact, facilitate both trade and investment. And we also support the foreign direct investment into Canada, so it's going both ways. I think if I talk initially at sort of for Canadian companies expanding into the European Union, then one thing to be mindful of is EU is not one homogeneous country, and it's every market is very different, and I can see my colleague nodding because we have two offices in Europe. One is in London. I know we kind of exited the EU. Promise I didn't vote for that. And we also have in Düsseldorf. And between the two, we divide and split Europe in terms of coverage. It's not possible to say that if it works in Italy, it will work in the UK, or if it works in Sweden, it will work somewhere in Romania. So the markets definitely need a different approach. Probably from kind of how can we help Canadian companies access these markets is another observation is it often helps to either have a local partner or to actually expand into market by establishing the representation. And that's obviously, you know, access the fantastic trade commissioner services that we have, because they have plethora of knowledge and expertise, and they can help sort of to access those markets. and it's probably different from depending on the type of export the companies are doing. Obviously, if the product requires maintenance and continuous support, that's where we see where a lot of European companies are asking, do you have presence in Europe? It does not necessarily mean that it has to be in exactly the same country, but it helps if it is somewhere on the continent, because it feels closer. So that's probably what I would say. Other panelists have already mentioned sort of other barriers. Obviously, again, it's not homogeneous, so some standards are still, maybe European standards are still quite difficult for Canadian companies to meet, or they have to make a lot of adjustments. But that's basically how the market operates, so it's up to each company to decide whether those adjustments are needed and if it's worthwhile making them to access the market.
And Shannon, now that the container shortage is easing, I mean, is Europe seen as a growth market for your port, and are there any bottlenecks or problems, for your customers to access the market?
So since the pandemic and the increase in trade with global markets and Canada, across the board, coupled with the coupling of some climatic issues that created congestion on the West Coast, the federal provincial governments within Canada have been investing heavily into the Canadian port system across the board. And in particular in St. John, being across the Atlantic, we've had, a $250 million investment in increasing capacity within our container operations. And that's allowing actually for diversification in services that will connect Canada with EU directly. So it'll provide access points that are more positive for shippers and receivers in both markets. So in the last year, we've added 2 direct services with Hapag-Lloyd, and with our connectivity with the CP network, it's giving accessibility to support the congestion on the West Coast, being able to connect by rail from the East to the West Coast directly. So as we continue to add capacity, we'll be adding more direct routes to support the increase in demand for the shift in trade between Canada and Europe.
Great. So where, there is one sort of slightly common problem here as well, which has risen in recent days. The US unilateral action tends to be getting stronger and stronger, even sort of post-Trump. And we had the Inflation Reduction Act, which Canada has enabled to have it's a series of subsidies for American businesses, basically. Now, Canada has managed to get an opt-out so it can join the electric vehicle chain, but there are many other industries where, Canada essentially will be competing against hefty subsidies available just a few miles south of the border, and Europe has the same issue. And I just wondered whether, both countries' blocs see this as a joint attempt to try and change the US's mind, or whether we feel this is impossible, given it's an act of Congress. Anybody want to try that one? Olga, maybe? No?
I think it would be for the partners to comment on specific tax regimes and policies. Just to go probably on your question beyond electric vehicles and everything. We actually were discussing how brilliant the introduction of the 30% tax incentive on the clean tech investment is, because definitely it gives competitiveness to Canadian companies. It encourages investment, and obviously, it's an ecosystem. It's a combination of different capital that Team Canada can provide. So I would say that for Canadian companies, they can tap into grants, they can tap into tax incentives, they can tap into the early stage investment like BDC, the growth capital that EDC provides, and then obviously the capital for investing internationally. So I would say, policy and capital availability inevitably will have to go hand in hand. You mentioned EVs. Another area where Canada will play and the tailwinds are there is, for example, on the green hydrogen side. So that's another basically area where Canada will have to compete with all other countries that want to orient themselves internationally. And obviously, as the scene develops, I'm sure there will be sort of a collaborative approach in terms of how to make Canada as competitive as it can possibly be. Because obviously resources are there, but I think we need to go and talk beyond just resources. Canada is not a supplier of just raw materials. It's semi-finished goods, it's finished goods. We have like 3 billion STEM graduates, million, not billion. And the technologies that are being invented, that's kind of all goes into trade and investment. So I think it's the tailwinds are there, and I fully believe that the cooperative approach will lead us to be the leader there.
Well, I would say we don't like it, this Inflation Reduction Act. We don't like the subsidies. We prefer competition. And unfortunately, we are already used to this treatment with the American. In the public procurement, never forget, buy America, buy American. We are excluded from many markets, except if you have very old companies into the United States with a European ownership. But otherwise, American market is always complicated, and this is not helping. It's good that they have established a task force between the EU and US to discuss about that, and it is not hopefully becoming a high political point. But I would be arguing that this Inflation Reduction Act is very much incompatible with WTO rules on subsidies, and that should be challenged and a point, and we will see how the Americans are going to be reacting. But you cannot ask to the European to follow blindly US policy towards China, and then when we say we're good allies, we are blocked into some better alliance with the United States. So we will have to test here what a friendship means really. But in terms of business, I would argue that we don't like the subsidies and we don't like the way it is treated. It would be if they want to give some subsidies, it should simply be non-discriminatory. So the nationality of the receiver should not be into the discussion. Thank you.
Well, if I may, the Inflation Reduction Act is really a form of industrial policy. It's not something that the U.S. is really known for, so they're sort of venturing into new territory. The EU has its own industrial policy, and Canada is also introducing its own industrial policy. And so they're all moving, it seems, in the same direction in terms of digital transition, in terms of friendshoring and whatever term you want to use. But fundamentally, they're moving in the right direction, or the same direction, I should say. And as Pascal said, there are forums that do exist, and it can only hope that the discussions take place there and can be coordinated in that manner. Because Canada doesn't want to be in a position where it has to choose either. So.
No, I mean, so just sort of, I mean, I guess the EU and Canada are both among the biggest friends of the multilateral trading system. And I think there's a feeling from some of the people in Canadian business that maybe, Canada doesn't get the attention it deserves from the EU. I mean, is there any way of changing that situation apart from, the ambassador's clarion call and events such as this? I mean, is that a fair characterization? Or, I mean, we see commissioners rushing off to Algeria and, other Azerbaijan in search of oil and gas. Yeah, so I just wonder if that was if that's fair, and if there is a way of changing it. I guess given that they are like-minded countries, especially on multilateral trade. Volunteers? Any volunteers?
Well, maybe I can start. I mean, yes. Canada and the EU are very close friends. We are in the G7, we're in the G20, there is the Ottawa group in WTO. We are really like-minded countries, so why don't we do more? I think we're already doing a lot, and we should not ignore. I mean, the ambassador has given the figures, and we have increased this since CETA. So CETA is an effective agreement. But the size of the market is there, and the country is big, but the size of the market is only 40 million. So that's one argument that in any case, it's always be there. Canada is completely integrated into the supply chain of the United States, is using the legal system of the United States. So to change this, we know it's a challenge. But clearly, Canada also, I think I would agree that they would like to diversify. It is not that there is any major problem between the North and the South, but nevertheless, the willingness to diversify is there. And I think that's probably one of have been the trigger of the CETA itself. But CETA has been there, unlocking the door for the EU market. We hope we will be doing more. I'd like to maybe give a bit focus on the foreign direct investment, which has already been mentioned in the previous panel. But it is not sufficiently well known that Canada is one of the biggest investors in the world and is playing in a bigger court than the size of its market itself. So EU is by very far the number one foreign direct investment investor into the world and a big receiver investment as well. But Canada is the number 6 into foreign direct investment in the world, and this is really huge. In terms of investment between EU and Canada, Canada is the 4th biggest partner of investment coming to the EU and going from the EU to Canada. So we're already very strong partner there. Could we do better? Yes, certainly. I look at the figures and I found out that the figures between EU and US are 10 times bigger than between EU and Canada. So maybe we could think that we have reached the maximum what we could do with the United States. But if I look at the figures, the EU is investing 21 of its all foreign direct investment is going to the United States, while that is also nearly the same share, our investment going to Canada. But looking at the investment coming from Canada to the European Union, it's a bit lower. It's only 13%. So maybe we would like to welcome more investment to the European Union, and I think CETA is going to be a good tool for that. So let's open. Thank you.
I'd like to add to that, if I may.
Yeah, please do.
Yeah, so 3 factors, I would say: pandemic, shift in global trade, the geopolitical situations, in particular with Ukraine and Russia, and also Europe's climate target plan. I think that those 3 factors are really going to change the narrative with respect to the ways in which Canada as a nation can support the different components within the European market. So I know it was brought up before, but looking at natural resources like potash, where it was historically sourced for Europe in Russia and China, looking at Canada as a close partner to be able to source potash to support the market in Europe. And also the climate target plan that Europe has, quite aggressive by 2030, and looking at Canada as a source point for green energy. I think that those 3 components, as well as pandemic, is going to really shift that narrative and give Canada the opportunity to build and grow the trade opportunities between Canada and Europe.
Well, it's true that perhaps Europe hasn't looked at Canada as closely in the past, but it's also true that Canada hasn't looked at Europe as well as it should have as well in the past as well. It's got a strong relationship with the U.S. and a lot of the economy is integrated accordingly. That said, I do think in terms of natural resources, there's an immediate need in Europe, and that's certainly taking up a lot of the press headlines. I think when it comes to natural gas, that's going to be a challenge. That has more to do probably with Canada's own internal political system and dynamics. Nevertheless, there is talk of the opening up on the western coast. So there'll be greater shipments of LNG to the Pacific side and therefore the global market. On critical raw materials, that's actually quite different, and that's where, again, Canada has the natural resources. Some of them are being exploited now. However, a lot of them still need to require a lot more work. It requires R&D, it requires capital, and that's where you see the real potential for Canada-EU collaboration. There's a lot of focus on that particular industry and that particular relationship. Next week in Brussels, the EU will be hosting the Raw Materials Week. There'll be a focus on the Canada-EU collaboration on that front. So, this is where Canada-EU collaboration can really be, put in full effect, particularly when it comes to integrating supply lines or, supply chains. But also, in terms of the geopolitical context, I think Canada will now become an even more attractive supplier for the EU, particularly when the EU is looking to source responsibly. There's a lot of symmetry between the consumer markets, both consumer groups in Canada and in the EU. They have a very high standard in terms of consumer products, whether that be goods or services. They want to make sure those are responsibly sourced, that they're, in terms of produced with responsible labor and environmental conditions as well. And as the EU moves towards codifying these responsibilities for businesses in terms of supply chain due diligence and responsible sourcing, I think Canada will be a very attractive place for it to look in the future when it comes to supplying.
Great. Thanks very much. We'll better leave it there because we're up against the time for the coffee break. So if I can just ask you to thank the panel and then make your way to the back afterwards for some coffee.
You do your thing, and you do it well. Now, it's time to do it bigger. It's time for Shopify. Just getting started? Shopify makes it easy to set up your online store. Choose a theme. Customize it to best represent your brand. Then, add your products. Manage your inventory. Track your orders. Get 24/7 support. Everything you need to launch your business. Today. Now. Already built your brand? Now it's time to think bigger, way bigger. Shopify can help you expand into new sales channels so you can put your products in front of millions of shoppers while you market and sell your products, all from one place. Ready to bring your brand into the real world? Shopify is ready for that too. With a retail point of sale solution that lets you sell in stores, or markets, or pop-up events, wherever your customers find you. You'll be there to make the sale. Need to raise capital for your next big idea? Funding is now just a few clicks away. Stock up on inventory, hire new talent, expand to new locations, launch that new ad campaign. Anything's possible with Shopify Capital. Your funding will be available almost instantly. And with Shopify Payments, immediately accept credit cards, other popular payment methods, even different currencies. It's the fastest checkout experience possible, converting shoppers into customers. Your idea, your business, your future, powered by Shopify.